Alright guys, welcome back to Wolfpack Cryptos and MMGinvest. In today's video we're going to cover the stock market and some of the recent news events. So I will cover the news first, then I'll go into pricing and charting. So here's a New York Times article. Trump's trade deficit hits record $891 billion. Now, one of the main talking points or promises Trump was making in 2016 when he was running was to fix the trade deficit. And it's actually getting worse. Now, that's easy to explain. Tariffs, they don't work. They never have. And one could argue Trump is doing the tariff war so China capitulates to Trump, and then he could somehow make some sort of deal with China where with trading, somehow they pay higher prices and our trade deficit goes down. The problem isn't China. The problem is the United States and the government and its high taxation and its its massive regulations. That's what makes the United States not competitive on a global scale. And then one could argue, yeah, well, China has infinite people, manpower. And they are willing to work for much cheaper prices, labor prices. True. Yeah, that is also true. There are demographics that are also at play and not in the U.S.'s favor. But one of the things about China versus the U.S. when it comes to production and producing things and manufacturing is quality. And the problem is 500 Fortune companies are going to China, giving them their trade secrets and their technology. In return, they get to sell their goods in China, right? And a lot of companies are moving their headquarters to China. I think Apple did. I'm not exactly sure about that. Don't quote me on it. But they moved one of their headquarters or the headquarters to China because they technically it's a Chinese company at that point. It's because they have zero taxes on corporations now. And then, you know, politically there's the debate over, well, corporations aren't paying taxes. Amazon recently did not pay taxes. Meanwhile, they get tax subsidies, right? Which I'm not a fan of that either. But at the same time, you have to understand that the regulations destroy the competition and the small companies, which cannot compete with Amazon and these monopoly companies. So these monopoly companies gut the United States, and then they move overseas once they're finished here, and then they pay even less taxes or no taxes in other countries. And that's how the middle class gets destroyed in the United States. And on top of that, you have the Federal Reserve printing money, which inflation destroys the middle class as well as they get robbed through a stealth tax. Meanwhile, all that money printing goes straight into the stock market, creating a giant bubble and keeping these zombie companies and these monopoly corporations artificially propped up. Meanwhile, they really wouldn't be able to compete in a free market. But we don't have a free market. So the trade deficit is just getting worse and worse, and in a big way. In later videos, I will show some charts when I go in depth about that, but that's the macro. I will be posting these articles in the MMG Invest chat room. The link's below for the free room. EU worries about recession risks in Italy, German slowdown. Nothing new. I mean, the Eurozone's falling apart. Their financial sector is, it's pretty much like Lehman Brothers at this point. Lehman Brothers, you know, one of the firms that went under right before the Great Recession in 2009, which were levered up with mortgage-backed securities. Same with these banks in Europe. They're pretty much Lehman Brothers. I mean, and not just that. Mario Draghi and the ECB, they've been printing money, and they couldn't even normalize interest rates like the U.S. has tried in the past 2 years. They couldn't even raise them a quarter basis point because Deutsche Bank is pretty much merging now because it has pretty much gone under. Strong job headline hides broad-based weakness. So you have to look at the U6 unemployment. You have to understand that the way the central banks come out with these jobs reports, right? Which is crazy in itself. The central bank shouldn't be. The private sector should be providing this data, which they do. There are many private sector firms that provide the data. I like Shadow Stats because they measure the data based on the way they used to do it a few decades ago. And that's what gives you the true unemployment. True unemployment's still high. I mean, I think it's around 7%, 8%. The problem is the way that the Fed calculates unemployment is if you have 2 part-time jobs and you lost your full-time job, now you're considered 2 employees in the workforce. If you lost your job and you stopped looking for a job, you are no longer even in the data, in the statistics, so therefore they don't count it against the current numbers. So it's something crazy, like 40% don't work out of the population, including kids and elderly in the US. But people who actually pay into taxes, who do not get tax refunds, is just shrinking and shrinking and shrinking. Here's average weekly earnings for US manufacturing employees. It's been dropping steadily. It peaked out in July 2017. You could say from July 2016 to July 2017 it peaked out, and it's been falling off a cliff ever since to current. And manufacturing is the #1 type of employment for a healthy economy, because the country needs to make things and then sell them abroad, because you have to think of countries in themselves as companies, as corporations. Also, another promise that Trump isn't delivering on. He talks like he's delivering on them, but he's not. Here's full-time versus part-time jobs. As you can see, change in full-time jobs, the blue bars, and then change in part-time jobs. It's actually consolidating looking at this chart, meaning we're going to get a rise in full-time jobs, or we're going to get a huge drop in full-time jobs. I bet you we're going to get a drop, because we're coming up on the end of the credit cycle, and the credit cycle is the Fed has been blowing up a bubble for the past 10 years since the 2008-2009 MBS crisis, right? And we're at peak employment probably right now, and it's probably starting to fall already. All right, jobs added by industry. So education and health, a lot has been added there. Now, does education and health contribute to economic growth? No. Education, well, education is supposed to, because higher IQ society, it becomes more productive and you get more entrepreneurs. That's how it's supposed to work. Higher education and public education, you could argue it these days it's like indoctrination of socialism. So it's actually more education is actually worse for now, the society and the economy. Health, well, it's really the healthcare industry. Yes, there's doctors and nurses making money. The problem is it's a service sector industry, and what it's doing is it's patching up the baby boomers and everyone who makes bad decisions and is overweight and is eating unhealthy, and people are getting cancer from everything now. And that doesn't create productivity. All it does is it maintains what's left of it, or attempts to maintain it. And not just that, healthcare deficits for the United States, because of the current healthcare system, which is not free market at all, is just bankrupting the country. And that's a whole separate video on its own. Professional business services and temp workers. That's been rising. Again, professional business services and temporary workers, not really contributing to the economy. I mean, temp workers, yeah, they help companies cut loss, so that contributes a little bit. But, that's just temp workers. People who are temp workers, they never make enough to support themselves, and it's not a long-term job. And this also helps boost and fudge the jobs data, because these people are considered as employed and fully employed temp workers. When that temp job runs out, which it will soon, as the stock market, or at least the real economy, starts rolling over, and because we're overdue for a recession. In a few months from now, we'll have the longest expansion in American history. So when the recession comes, those people are all going to lose their jobs. Leisure and hospitality it doesn't help grow the economy. Construction, that does help grow the economy, and we're actually losing construction jobs. Also, if Trump actually gets a construction bill passed where the government could spend trillions or billions, tens of billions on repairing the roads in the United States, that's not economic growth. It's like a temporary bandage. And yes, you get some construction jobs and you get some money velocity going, but at the end of the day, you're just fixing what's already there, and it doesn't boost the economy. There's no productivity. You have to understand that. Not just that, these union construction jobs, not only are they overpaid, but they cannot build a road that lasts more than 2 years at this point. And I live in the north where we get snow. They cannot build a decent road that lasts more than 2 years, I swear. And they do that on purpose so they have job security, and they keep rebuilding these highways and roads, which is unproductive and destroys the economy in the long run. And not just that, when you're a union, there's no incentive to do your best work and be productive. That's why they get breaks every hour. All right, other services, government. Government is always growing, no matter what, until the end. Until everything blows up, it's going to be growing. And that's another reason why the United States as a country as a whole is unproductive. Same with Europe and China and the rest of them. All right, financial activities, they're up. That doesn't... The financialization of the economy, while the industrial manufacturing gets gutted, is just another phenomena upon itself. Information, that is actually falling a little bit. Transportation and warehouse, that's it's a nowhere land, neutral, sort of falling. Mining and lodging, it's negative. Wholesale trade, negative. So trade is down globally. Temp and help services. Actually, right here, this is the actual main temporary job and help services. That is actually negative now. So it's already pulling back. It might be... So that's another indication that we're coming close to a recession. And coming close means we could probably... we could slowly chug along here for a year or two. Who knows? Manufacturing, of course, that is in decline. And retail trade, it's the retail apocalypse. If you haven't noticed, all your favorite retailers are gone. Alright, so Trump calls on Fed to cut interest rates. And let me turn this off. So, I talked about this in my crypto video. And I said this is possibly very bullish for Bitcoin and gold and silver, right? And that's because Trump knows that the economy the stock market will collapse, the bond market, and the economy as a whole will go with it. They all go together. And they used to not. They used to not go together. The financial markets used to be independent from Main Street. And in a way, it still is. But if the stock market falls and crashes, the Main Street will suffer. Now, if the stock market goes higher and higher, that does not mean that the real underlying economy is getting stronger. It just might keep it stagnant. And the reason for that is money velocity, and it gets complicated. I don't want to get into it. But Trump knows that the Federal Reserve has to cut interest rates and start up QE to keep the party going. Because you have to understand, it takes more and more money to maintain what we already have. Because it's a bubble and a Ponzi scheme. So, just to maintain where things are at right now, they have to cut rates. To get the stock market to go higher, they have to do quantitative easing and print more overall. And by the way, cutting rates, you're still printing money. But QE is like you're injecting trillions and trillions into the banks and into the stock market. And with the Ponzi scheme, to maintain it and to keep it going, it constantly needs more and more money. Or fiat. I don't want to say money, but fiat currency. And it's insane. I can't. It's really insane. There's a compounding effect to this. So the balance sheet was $4 trillion for this past decade of stimulus, growth, Fed financial cycle. The next one is gonna need, like, who knows, 10 trillion, maybe 40 trillion, something insane the next 10 years just to maintain what's going on right now. Meanwhile, the middle class will suffer and the real economy will deteriorate while the stock market goes higher because of high stagflation. People will be losing their jobs and prices are going to continue to rise and rise and rise, and everything is going to accelerate. All right. Why the U.S. trade deficit keeps growing? You guys can read this article. I'll put it in the free room. Pretty much because nothing's changed. I mean, for the U.S., for the trade deficit to actually normalize or fall, like I said, you have to deregulate like you've never seen before. Like, we have to go back to like early 1900s. And you have to lower taxes massively. And you have to rebuild a manufacturing base in the United States. Meaning you have to re-educate all these millennials who've been going to college and learning nothing. Or learning something, but nothing worth... nothing that makes you a productive human being. I mean, some degrees do, alright? Some do, not all of them. But I'm talking about the liberal arts degrees and whatnot. Current U.S. federal budget deficit. So check this out. 2018, revenue was $3.34 trillion. In 2019, it will be $3.42 trillion. These are estimates, projections. Now, if we go into a recession, revenue is going to drop, and spending's going to go through the roof because they have to spend money to keep the wheels turning when we go into recessions or depressions, you name it. But look at this. The spending is going to go up 4.41 trillion. Spending in 2018 was 4.17. So the deficit in 2018, if you subtract revenue from spending, was 0.83, and in 2019 it'll be 0.98. So deficit spending is going to be about $1 trillion, $1 trillion per year. Our entire economy is like 19 trillion GDP, but honestly, if you adjust it for inflation and take away the smoke and mirrors stats and whatnot, it's probably like 13 trillion. Now imagine you make $13,000 a year, but every year you go $1,000 into debt, more, and you already owe $20,000 in debt. And honestly, these projections are off. There's new projections out recently that say it's going to be 1.3. And if we go into a recession, it could easily be like 3 trillion or something crazy. So imagine you have, right now, what is the deficit? It's like 22 trillion. All right, so put this into perspective. You make, all right, so you make $3,300 a year. You spend $4,100 or $200 a year, and you went into debt almost $1,000 or $800. But you also have debt on top of that, which is $22,000. That was 2018. We're projected for 2019. You made $3,400 a year. You spent $4,400 a year. And so your deficit, you lost, you're negative, you charge your credit card $1,000. And then this could go really wrong if you lose your job. That's what a recession will be. And on top of all this, you have $22,000 in debt. Now, that doesn't include your medical bills, your healthcare medical bills, because you're diabetic or something, or you had a heart attack. That is a mix with your retirement and your student loans and all that. You on top of the $22,000 that you're in debt, you owe $166,000. So technically, you're almost $200,000 in debt, but you only make $3,400 a year, and your cost for living is like $4,400. All right, do you understand the fiscal outlook? All right, so the flat truth on yield curve and recessions. Now, I talked about the yield curve in my previous video. I think if the Fed cuts rates, the inversion of the yield curve will no longer, these ads, will no longer be inverted, but it'll rise. All right? It'll rise. So this is what it looked like right before the recession in 2008 and 9. All right? Right now the yield curve looks like this. There's a little bit of inversion, but they're going to cut rates probably, and the long-term yield, the 30 and the 20, it's all going to rise, and then the yield curve, they could invert the yield curve. I know a lot of people have been freaking out about it in the past week, but they could manipulate this, the Fed can, by cutting rates, and that's why Trump is going on record in public begging the Fed to cut rates. Which the Fed is not supposed to be political, but the thing is, if the Fed doesn't cut rates, and Trump knows they will cut rates no matter what he says, because that's what they're going to do. They were going to do this. Nothing is going out of bounds here. Trump is just ahead of the Fed and saying this. I don't know why, because in the end he's going to get blamed for all of this, but Anyways, the Fed could buy us some more time, all right, by cutting rates. And the stock market could go higher, and we could get a blow-off top. Now, that takes me to my prime investments, right? Gold. Check out gold. Trump said during a press briefing or interview, something like that, the Fed should start up QE4. And look what the gold market did the last 2 days. Look at these buying wicks right here. These huge buying wicks. Very bullish for gold. And we also have higher lows now. So the head and shoulders on the daily time frame did not play out. And perfect. So I'm I've never been so bullish on gold and silver. And if the stock market goes higher, gold and silver is going to go higher. Like I said, it's because they're cutting rates. And they're going to ramp up QE printing. And the stock market could keep going higher, all-time highs. And gold and silver will just go along with it because they're printing money to do it. Do you understand? You're going to start seeing inflation really pick up in your normal life. Like when you go out shopping for groceries, utility bills, everything. All right. So that's how gold. I'm still bullish on gold for the long term. Now for the short term, intermediate, the weekly chart, we finally had the MACD cross to the downside. The RSI is already oversold. Momentum indicator is starting to become oversold. I'm pretty bullish on gold for the long term. Can we dip again, back to 1260 or something? Sure, I don't care. If we do, I'll buy even more. All right. But like I said, I talked about this, guys. My blue equilibrium line here is about to cross below the 200-week moving average. So the 200-week moving average is going to cross above my blue equilibrium line. Last time that happened was back in 2002, and we had a decade-long bull market in gold and silver. And fortunes were made in the mining stocks. All right. Which brings me to, if you're interested in research on mining stocks, go to Wolfpack Crypto, go to MMGinvest.com. Click on this video on the homepage of the website, and I give you a sneak peek to what the research report looks like. And this product will pay for itself. And hopefully, I'm not hoping, I know, a lot of these stocks are going to have life-changing gains. Also, I just want to update you guys on some things here. If you buy the MMG Invest research report, you get a special invitation to the MMG Elite chat room where we trade stocks and talk about things, share ideas, and I update you guys on some more mining stocks I'm looking at, and those will be coming out in the next few weeks. Right now I'm just really busy. I have to finish taxes. Anyways, so if you buy the research report, you get the invite. It's $10 a month. But if you're also in the MMG, you bought the research report for the MMG Invest group and the Wolfpack Cryptos group, then you get a 40% discount, and it's only $15 a month for both private groups, where you get updates, signals, the whole 9 yards. So if you're a loyal customer, I'll reward you guys, all right? I mean, that's a huge discount, $15 a month for both, for Wolfpack Cryptos and MMG Invest. Of course, you have to buy the reports to be able to be a part of the private groups. All right, guys? All right, so let's get back to it. Let's go back to charting. All right, so I like looking at the Russell 2000. This is the daily chart. We're on a 7 count. So Monday and Tuesday. So by Tuesday, we will be on the 9 count. according to the TD indicator, a 9 count signals a sell-off, a correction, and I'm not doing anything until then. The only position I have is my short on Tesla. Let's take a look at that real quick for the private members. And we've been shorting this for quite some time. It had a nice little bounce because Elon went to court with the SEC, and then he came out afterwards and said, oh, I'm pretty much vindicated, nothing's going to happen, and the SEC didn't really clamp down on him as much as they should have, because he literally tweeted fraud in public, and billions of dollars were traded. If you guys remember, when he tweeted out that he was going to take Tesla private and funds were secured, that is definitely illegal. But you know, they're going to give him a slap on the wrist, because if Tesla goes down, the entire stock market might go down. That's pretty much my opinion, my thought. I could be wrong. Anyways, I've been short since like up here, so I'm going to keep my position on here and wait until Wednesday to see what the stock market does. The FANG stocks, they've come up on major resistance right here at 2,760 pretty much on the FANG index futures here. And this is another reason why I think we're finally going to get a pullback or a correction in the equities in the stock market. All right, guys. And also, I mean, looking at the daily chart, I have a bunch of indicators. All oscillators are overextended on the daily. They are also overextended on the 3-day chart. Extremely overextended on the 3-day chart. And this is the S&P 500. And weekly chart, super extended here. All right. So the stock market, I get it. It's very close to reaching its previous all-time highs of 2,937 on the S&P 500. And we're at 2,892. So are we going to get a double top? I don't know. Are we actually going to go blow through the all-time high and go a little bit higher by Wednesday in the next 2 days? I doubt it. I think we're going to pull back by Wednesday. Or we should. But I'll keep you guys updated. So I will be making a video Tuesday. Definitely by Tuesday. Updating you guys on the stock market and everything else. Alright, guys. And cryptos. Real quick for cryptos, I'm just waiting to see what happens tonight and tomorrow. Alright, I still expect a major correction coming. I don't care how high the FOMO takes this. It's going to pull back. Alright. If you guys enjoyed this video, found it informative, smash that like. Leave anything in the comment section. Anything. It helps my videos. And I do answer questions. And check out all the links below this video. And there's the free chat rooms. Go to MMGinvest.com for research analysis on mining stocks for metals. And because the time's running out. Listen, you don't want to miss that train. And I mean, when you have Trump literally out there calling for QE, and supposedly the economy is strong and the stock market's at all-time highs, there's nothing more bullish for gold and silver. And China and Russia are buying it hand over fist. Alright, so yeah. Until next time, guys.